Hi everyone and welcome to today's morning report on Thursday the 11th of February with Mirror Japan Market Analyst at Tech Markets. We've had an incredible open to the European trading session, actually huge losses on equity markets. FTSE down 2.5%, DAX down over 3%, CAC down 3.5% as I speak. And this move has just been driven by the continued flood into safe haven trades away from anything of risk whatsoever. The yen has strengthened hugely, 200 ticks lower on the dollar yen, down below 112 now. It's sort of coming back to levels that well, incredible. I'll sort of talk you through the yen chart in a bit, but just huge downside, potentially down towards 110 is the next support level of any real note. We're also seeing sort of stability in the euro as well, but flood out of anything risky, sort of being the driving force of the lower oil price. But look at the 10-year yield on the treasuries now. That's the lowest, breaking down below that January 2015 low. That's, if I zoom out, the lowest we've got that level since sort of May 2013, so it continues to suggest that real concerns over global growth. We had that Janet Yellen testimony yesterday. She was basically saying that there is a concern, although at the moment there's sort of steady as she goes in terms of the US economy, the impact of the continued sort of volatility and negativity in the financial markets at the moment could have a negative impact on the US economy going forward, and that would impact on rates. So it certainly looks as though that the Fed is sort of pretty much taking off the table of rate. Well, I mean, taking off the table a March rate hike, but possibly even further rate hikes in 2016 as well. So this has hit the dollar. Obviously, the yen weakness has hit the dollar, but also the euro strengthen as well. The yen strength and the euro strength has hit the dollar. Although obviously we've got sort of the dollar sort of sits in the middle between sort of Kiwi strength, Kiwi dollar weakness, Aussie dollar weakness, and also sterling dollar weakness as well. So real moves that we're seeing on these markets today. So that is also, let me just show you the oil price, which continues to fall away, having broken below the 29.20 support. It continues to come back towards that January low of 26.20, and it looks like that is going to be tested imminently, pretty much. So very negative outlook pretty much across all markets as we speak. So what have we got to look forward to today? Well, not really a great deal that can turn the mood around, really. You've got the weekly jobless claims at 130, 280, sort of mid 280 is again expected there. The chart just continues to sort of buzz around the 275, 285 level, and it's expected to come in around about that sort of level again today. We've got Janet Yellen's second congressional testimony to the Senate this time today. Don't expect any real change of views there. You might get a bit of volatility, but still unlikely to change. We've also had a rate cut from the Swedish central bank, the Riksbank, 15 basis point cut to the repo rates, and that is certainly also helping to sort of drive the weakness and the flight to safety. What has the Riksbank seen ahead that would require it to be aggressive in its cutting of rates there? So what have we got to drive the chart of the day? Well, I did the Kiwi dollar. In fact, that's the wrong way around, isn't it? That should be New Zealand dollar versus the dollar. Sorry, I apologise for that on the cross rate. But anyway, I've got the Kiwi dollar as my chart of the day, and it's been in this uptrend. Actually, it's interesting because despite the fact the oil price has been going down, you've got this dollar weakness, and dollar weakness has been sort of helping to net support the Kiwi dollar. Today's move has sharply dragged it back towards this uptrend, and also this near-term breakout support. 65.60 old resistance became supportive this week on Tuesday, and that is your near-term level. That is sort of also cuts through the uptrend as well. So that is certainly a key level to watch out near term. 65.60. We've not broken it yet, and it's interesting because we've had this turnaround today. It's not yet broken it to the downside. Could this being a buying opportunity? Well, it's a risky one, but certainly at the moment you'd still argue that the bulls are pretty much in control. You've turned lower near term on the hourly indicators, but still that support at 65.60 is intact. So for now, you're still sort of got the bullish arguments intact on this, and that bullish argument is certainly on the driving of dollar weakness. And to be honest, I think the Yellen comments will sort of reaffirm dollar weakness. Today, you've had the volatility around sort of the massive flight to safety, so the commodity pairs have sort of been negatively impacted on the back of that. But on a net basis, if the Kiwi dollar can find support of 65.60 again, which it looks to potentially have been doing so, because until we've had this sharp sell-off in the European session, to be honest, the Kiwi dollar was looking pretty strong, wasn't it? Um, you had a strong reaction yesterday on the back of that Yellen press conference. That was the Yellen press conference there. Slight sort of fall away, but then subsequently the market moved strongly higher. It's just that in this European session, as the market has just fallen out of bed, the Kiwi has just fallen away again. But if that support can hold intact, 65.60, I think that could be a nice little buying opportunity potentially. So it'll be interesting to see how this one plays out. But it certainly looks at the moment as though if you're going on technicals, you've still got the uptrend intact. You're still above the support. Hourly momentum is basically unwound back to sort of the levels at which in recent days the buyers have come in, and it's looking not too dreadful. So it'll be interesting to see how this one plays out, but I still think this could be in line for some further dollar weakness, US dollar weakness, and some gains. But it'll be interesting to watch this one, I think. So I wish you good luck in your trading on the Kiwi dollar today, and I'll speak to you later. Thank you.